Imagine you have the keys to a treasure chest, but you can only open it once every 4 years. What would you do? How would you feel? Well, in the world of cryptocurrency, something very similar is happening. There's a mysterious Bitcoin wallet, a digital treasure chest, that shows activity only once, like clockwork, every 4 years. Today, we're going on a deep dive to uncover the secrets behind this fascinating crypto enigma. Is it a long-term investor, forgotten stash, or something far more calculated? Let's find out. First, let's set the stage. What exactly are we talking about? In the vast ocean of the Bitcoin blockchain, every transaction is public. We can see digital currency moving from one address or wallet to another, but we don't know who owns these wallets unless they reveal themselves. This brings us to a specific wallet address that has captured the imagination of crypto enthusiasts and detectives alike. This isn't just any old wallet. It's a whale. A term we use for an address holding a massive amount of Bitcoin, and this particular whale has a very peculiar habit. The story begins back in 2012. An unknown entity consolidates a huge amount of Bitcoin into a single wallet. We're talking about tens of thousands of coins. At the time, Bitcoin's price was a tiny fraction of what it is today, but even then, it was a significant sum. For 4 long years, this wallet lay dormant. Not a single coin moved. It was like a sleeping giant. Then, in 2016, it woke up. A transaction occurred and a portion of the Bitcoin was moved. After that single move, silence again. 4 more years passed. The crypto world went through booms and busts. The price of Bitcoin skyrocketed, yet this wallet remained untouched. Then, in 2020, right on schedule, another transaction. And again, in 2024, the pattern repeated. This 4-year cycle is too precise to be a coincidence. So what's the theory? The most compelling theory links this wallet to the Bitcoin Halving Cycle. For those who might be new to this, the Bitcoin Halving is a pre-programmed event that happens approximately every 4 years. It cuts the reward for mining new Bitcoin blocks in half. This process is designed to control the supply of new Bitcoins, making the currency scarcer over time. Historically, halving events have been followed by significant bull runs in the crypto market. The first halving was in November 2012. The second was in July 2016. The third was in May 2020. And the most recent one was in April 2024. Notice the pattern? The wallet's activity aligns perfectly with these halving years. So, the theory goes that the owner of this wallet is a very savvy, very patient investor who understands the market cycles of Bitcoin better than almost anyone. They accumulate Bitcoin, wait for the halving, and then take some profits during the subsequent market upswing that typically follows. They sell just enough to realize substantial gains. Then they go back into hibernation, waiting for the next cycle. It's a masterclass in long-term, disciplined investing. This strategy is the polar opposite of the frantic day trading that many people associate with crypto. It's about deep conviction in Bitcoin's long-term value and an almost prophetic understanding of its market dynamics. Let's break down the potential strategy. Think of it like a farmer. The farmer plants seeds and then waits patiently for the harvest season. They don't dig up the seeds every day to see if they've grown. Our mysterious whale is a crypto farmer. They planted their Bitcoin seeds years ago. The harvest season comes in the year of the halving. They sell a portion of their holdings, likely when the price is high after the halving event has kicked off a new bull market. This provides them with capital to live on, reinvest, or simply enjoy, all while still holding a massive amount of Bitcoin that continues to appreciate in value. It's an incredibly disciplined approach that requires nerves of steel. Imagine holding on to billions of dollars through wild price swings, resisting the temptation to sell when everyone else is panicking or getting greedy. Who could be behind this? The speculation is wild. Some people think it could be one of the early Bitcoin pioneers, someone who was mining or buying coins when they were worth pennies. They would have accumulated a vast fortune with a very small initial investment. This person would have a deep, fundamental understanding of how Bitcoin was designed to work, including the significance of the halving. Others suggest it could be a company or an investment fund that has a very specific long-term mandate. Maybe it's a financial institution that got into Bitcoin very early and is now executing a pre-planned, multi-decade strategy. Another, more intriguing possibility is that it belongs to a programmer or a group of programmers who automated this entire process. They could have written a script, a smart contract of sorts, that automatically executes a transaction every 4 years based on a set of predefined conditions. This would explain the clockwork precision of the movements. The owner might not even need to be actively involved. The whole thing could be running on autopilot. This is the ultimate set-it-and-forget-it investment strategy, but on a scale that is almost unimaginable. Let's look at the numbers to understand the sheer scale of this. While the exact amount fluctuates, this wallet has consistently held tens of thousands of Bitcoin. At various points, its value has soared into the billions of dollars. Each time a transaction occurs, on-chain analysts and crypto communities buzz with excitement, trying to decipher the meaning. Was it a sale? Was it just moving funds to a new, more secure address? Often, the funds are moved to multiple new wallets, a practice that can increase security or be a prelude to selling on various exchanges. The meticulous tracking of these movements becomes a spectator sport for the crypto world. The existence of this wallet teaches us some valuable lessons about investing, whether in crypto or traditional markets. First, patience is a virtue. The greatest wealth is often built not through rapid-fire trading, but through long-term holding of valuable assets. This whale has demonstrated an almost superhuman level of patience. Second, it highlights the importance of having a clear strategy. This investor isn't reacting to daily news or market noise. They have a plan based on the fundamental mechanics of the asset, and they are sticking to it cycle after cycle. It's a powerful reminder to zoom out and look at the bigger picture, instead of getting caught up in short-term volatility. Third, it reinforces the core idea of Bitcoin as a long-term store of value. The owner of this wallet is treating Bitcoin not as a get-rich-quick scheme, but as a digital equivalent of gold, a safe haven asset to be held for decades. Their actions speak louder than words, expressing a deep conviction in Bitcoin's future. Of course, there are other, less exciting possibilities. The wallet could belong to an entity that is legally or contractually obligated to move funds only at specific intervals. For example, it could be part of a trust or an inheritance that has very strict rules about when assets can be accessed. Another theory is that it is connected to seized assets from a defunct marketplace or a law enforcement agency that is liquidating holdings on a fixed schedule. However, the strong correlation with the Bitcoin halving makes the savvy investor theory the most popular and, frankly, the most compelling. The mystery also underscores the pseudo-anonymous nature of Bitcoin. We can see everything that happens on the blockchain. The what, the when, the how much, but the who remains a secret. This wallet is a perfect example. It's one of the most watched addresses in the entire crypto ecosystem, and yet its owner is a complete ghost. This is a core feature of cryptocurrencies, but it also fuels endless fascination and speculation. So what happens next? All eyes will be on this wallet as we head towards 2028, the year of the next Bitcoin halving. Will the pattern hold? Will the sleeping giant awaken once more to take profits and reshuffle its digital treasure? If it does, it will further cement its legendary status in crypto folklore. If it doesn't, that will create a whole new mystery. Did the owner lose their keys? Did they pass away? Or did they simply change their strategy? The story of the 4-year wallet is more than just a curiosity. It's a narrative about foresight, discipline, and the profound impact of Bitcoin's core design. It's a real-time case study in long-term value investing on a massive scale. As we continue to watch this digital ghost, we're not just watching transactions. We're watching a strategy unfold, a legend being written, one block at a time every 4 years. It reminds us that in the fast-paced world of crypto, sometimes the most powerful move is to do nothing at all. What do you think is behind this mysterious wallet? Is it a genius investor, an automated program, or something else entirely? Let me know your theories down in the comments. Thanks for watching, and if you enjoyed this deep dive, make sure to like, subscribe, and hit that notification bell so you don't miss our next video. See you next time.